from someone who's been following and covering this company and, of course, Elon Musk himself. How do you think just sort of the way that this has played out and the drama that it's putting really on the company, too?
I mean, doesn't this just feel like the most Twitter thing of all time to happen, right? It's just this deal that just continues to be a roller coaster. And the fact that we now have Elon kind of coming out today and suggesting, hey, I might be, interested in negotiating a lower price for this deal, even though I just offered something else a few weeks ago. It just all feels like this is kind of cascading in a negative way for Twitter. I always have said that the worst case scenario for them would be that this deal falls apart and they're kind of left standing there without anybody to come acquire them. And it feels like that's becoming more and more likely every day.
And Mandeep, let me bring you in on that, because similar to what we just heard from Kurt, I was hearing from Dan Ives over at Wedbush earlier saying, again, sort of this worst case scenario, they're going to be left at the altar alone, right? How do you think about the lack of no bidders? And is this Elon's way of negotiating down in price?
I do think, he doesn't have a way out of paying that $1 billion in breakup termination fee in case he wants to walk away. But at the same time, the odds of the deal happening are higher than they were probably 3 weeks back when the deal was announced. And the reason I say that is because at least he has $6.5 billion in commitments from, co-partners. And what he really wants to do here is to, move away from that margin loan. So right now, he doesn't have about, 12 to $13 billion in financing. He has already sold a bunch of stocks, so that's about 11 billion. He's got 6.5 billion in commitments, so he really wants to move away from that 12.5 billion margin loan, and that is what I think he's looking to renegotiate here to bring that price lower.
Very interesting. And Kurt, I think at the heart of this issue comes down to the percent of users that are represented by bots. When you think about Twitter, whether that number is 5 or 20% relative to Meta, Snap, TikTok, I mean, sort of the other social media companies that you cover, how does that bot relationship fit into this narrative?
Yeah, he talked a lot about that today. He was at a conference in Miami. Our Bloomberg reporters, my colleagues, were not at the conference, but were able to listen into the conference as it was happening. And he brought this up, he was saying, hey, this is an issue. I don't believe that bots are less than 5% of the total user base, which is what Twitter says in earnings. And Facebook says something similar. To be clear, this is not a unique situation for Twitter. But Elon has had an issue with bots. He's made it part of his kind of campaign of how he's going to clean up the service and what he's going to do to change Twitter. And he's saying he believes it's to be a lot higher. And we saw CEO Parag Agrawal from Twitter kind of going back and forth with Elon today, trying to explain, hey, here's how we measure bots. And Elon replied with a poop emoji, right? He clearly was not interested in Agrawal's explanation here. And I think that's a big sign as to why he's, saying this is on hold. He wants more answers.
You're not allowed to use that emoji with me, Kurt. Neither is Mandeep.
I would never do that.
Mandeep, you've been commenting on this similarly. You take a look at a bottom-up analysis of these companies, the actual fundamentals, user growth, revenue growth, profitability. How, Mandeep, do you think about the percentage of bots, the impact on the health of this company?
Well, so clearly it's a bigger problem with Twitter. And when you take out, let's say, 5% of the users are bots. So the EV per user goes up that Elon is paying with this deal. And when you look at a comp like Snapchat or Pinterest, right now the EV per user is close to $100, whereas with the $44 billion deal, it comes down to around $200 for Twitter. And look, Twitter had this problem of, basically exaggerating their user numbers, and they had to kind of come out and say that the actual user numbers are lower. So it's not a new problem, but clearly if you're valuing a company based on the total number of users, then you have to think about, revising the price lower because the actual number of users are lower.
Mandeep, just a follow to you on this. I think we're having a broader discussion, and this broader discussion is underway about if that price target set a floor for how we think about valuing these companies. And the broader market is telling you, at least today in the last few weeks, we're rethinking valuations on every level, not just because yields are higher and the discount rate falls, but the big valuations of growth at any cost. How then sort of is this played out in the also thinking about the way that we're valuing these companies and these tech companies?
Well, so clearly, social media companies aren't really growth companies anymore. If you have to think about, growth, really, it has to, the next leg of social media would be more on the metaverse side. Right now, valuations have gone down everywhere, but I think Twitter isn't a high growth company anymore. Yes, it can sustain its EBITDA, but we're not talking about 40, 50% growth, even if it goes private. So that is where, you have to really think about which is actual growth going forward, as opposed to what can generate free cash flow to pay off the, interest payment.
And Kurt, come back in here. I think as we think about pushing this story forward, what do you want to see next? What are you looking for? What can we do private that we couldn't do public? What do you want to see in terms of leadership? What are you really looking for to understand if this company really can turn it around?
Well, I think the best way to grow the business is not going to be to abandon advertising altogether, which is what it feels like Elon kind of wants to do. He's talked about a subscription product. I think that's fine. But really, I think what you need to do if you're Twitter is you need to figure out how to get the kind of user data that works with targeted ads, that works with direct response ads, right? That is what Facebook and Google do really well. It's something that Twitter has always struggled with. They already have an ad business. They have advertisers who are interested. They just need more granular data in order to do that direct response type stuff. Now, it's easier said than done, but I think that's the one thing that if they can figure that out, I think the business could really benefit from that.
Mandeep, do you agree?
Well, clearly, I think subscriptions is part of the story here, but we've seen subscription businesses aren't easy. Look at Netflix. Netflix is moving into ads, so you really need a combination of ads and subscriptions. Moving away completely from ads would be a mistake.